Hi everyone, welcome back to my channel Sugar Mama TV. If you haven't subscribed already, please make sure you do. And in this video, I'm sharing with you what is inside my own personal and private investment portfolio. You guys share with me so much information in your comments, in your feedback, in your emails to me, in your one-on-one Skype consultations with me, and I thought, you know what, it's time I share with you where I invest. Now before I share this information with you, I want to remind you that these videos are general advice. Just because I've invested in a certain way, don't copy me because it may not necessarily be the right thing for you. I want you to understand that I am a growth to high growth investor. I love market volatility. I love watching my portfolio bounce around because that presents opportunity for me. And also, I am in this for the long term. I'm not trying to make a quick dollar. I'm about building wealth conservatively over a long period of time. And I always take a diversified approach to everything that I do when it comes to investing, because not all of my investments are going to perform in the same way at the same time. Some will do quite well, some will do badly, and some will do averagely. But when I look at the overall return with all the different assets inside my personal investment portfolio, they all help smooth out a good, strong average return. Now, when I am shopping for my own personal investments, I look for two key ingredients. Now, when I say investments, I'm talking about investments that are going to help build and grow my wealth. These two, I guess, key ingredients, you could say, are growth, capital growth and income growth. When I buy or invest in an asset, I want it to grow in value over the long run. I also want the income stream that's being created off that asset base to also grow over time, because as you guys know, the key to building financial independence and security is passive income streams. I want my investments paying me a passive income stream that more than covers my living expenses, because when I get to that point, I can choose to work if I want to, not because I have to. I have enough money coming in where I don't even need to get out of bed to cover my needs and my wants. Now, what is inside my personal private investment portfolio? Well, there's a combination of different things. There is residential property separate to my family home. I do not ever consider my family home to be an investment. It's a lifestyle asset. I also have commercial property that I own, and I also have a diversified share portfolio separate to the $1,000 project. Now, within my personal share portfolio, I have handpicked individual stocks, and these are stocks that I've read about in the paper or come across a research report or read up or really believed in that business, and I've invested in it. And I've done lots of research before I've picked those investments. Importantly, also inside that share portfolio is a range of different listed investment companies and exchange traded funds. Now, both these two investments, listed investment companies and exchange traded funds, allow me to continue on building my investment portfolio, but ensuring that it's diversified. I do not believe I am an expert at picking stocks, and I do not want to try and be one of those people. I'm not trying to beat the market. But when I invest in exchange traded funds or listed investment companies, I basically hand over that stress and that responsibility to a professional fund manager. And they have actually already handpicked those stocks in a diversified portfolio for me. And they charge a very small fee for those funds to do this. Now, my exchange traded funds are the international based ones. They include an US based ETF, and they also include an all-world index ETF as well. So not only have I just invested in the Australian share market, but I've also invested internationally as well. And I don't need to worry about whether I, the currency and when to buy and when to sell, and whether I buy Microsoft or whether I buy, Heinz. It doesn't really matter, because that is all taken care of by a professional fund manager. So it's a really easy way for yourself if you want to build up a diversified passive income stream through a diversified share portfolio. Now, those are my assets that help build my wealth over the long run. And as I said, these are very volatile, and I barely look at my portfolio. I probably look at it once every 1 to 2 months, because I don't care about market volatility. I only care about it when I want to buy and invest more. Now, the other asset that's within my personal investment portfolio, and that is cash. I only keep a small amount of money in cash at any time. I have a mortgage which I'm trying to pay down as quickly as possible, but I also always keep in cash emergency money. So if something suddenly pops up out of the blue, or there's a medical emergency, or something happens, I always have liquid cash ready to go to cover that expense. I will never need to reach for a credit card to get myself out of trouble. But if I have any excess money beyond that emergency money, I either use it to pay off my mortgage, or I use it to continue on building my passive income streams. Now, this brings me to my final question, which I want to share with you. If someone wrote me a check for $1 million and said, there you go, Canna, this is your money, do what you would like with it. Well, my answer, or what I would do immediately, is I would pay off my mortgage, wipe out my toxic non-deductible debt, and then I would redraw that money through a separate investment loan, and I would invest that money. And I would invest that money into shares. I wouldn't actually invest in any more property. When it comes to comparing the two different investments, main investments in my portfolio, the shares versus the property, I genuinely and honestly much prefer the share portfolio. And that includes the ETFs and the listed investment companies, because it is so much easier and more cost effective to invest in shares. And my dividend is so much more consistent and higher than what I get from my property investments. Now, this strategy is actually called debt recycling, and it enables me to focus on paying off my home and getting ahead financially, but also not lose out on valuable time in building and buying investment streams through shares. It's called debt recycling. I've already made a video that explains how to do this for yourself, which I will link in the video description box below, and I will also have a go at making a new version of this video so that you really understand how it works. But it enables me to, I guess, put my fingers in a few different pies and continue on growing financially, and also get a few tax deductions along the way, because that investment loan to buy those shares is tax deductible. Alright everyone, thank you for watching this video, and thank you for hearing about what's inside my personal share portfolio, because these are the things that I'm doing to build my own wealth. And as you know, I practice what I preach. Thanks for watching, guys. Don't forget to subscribe if you haven't already, and I will see you later in the week for Lifestyle Love. Ciao.